Hello learners. In previous lecture, we have seen the format of finance statement and we have discussed a lot about quantitative and qualitative analysis, right? So today I will be discussing about the methods of quantitative analysis. So generally there are three methods. First is horizontal, second is vertical analysis, and third one is ratio analysis. So right now I will be starting balance sheet and I will teach you that how to do vertical and horizontal analysis with help of balance sheet. Ratio analysis we will doing later on. So first I will starting with vertical and horizontal analysis. So here I have taken the balance sheet of Dabur Limited. You can see the balance sheet of Dabur Limited, and we will be learning how to do vertical and horizontal analysis. So if you see here that what actually is horizontal analysis. So first we will read the definition, and from definition we will try to understand that what actually is horizontal analysis. So horizontal analysis, also known as trend analysis or time series analysis, right? Financial analysts look at financial trend over the period of time, especially quarter or year. So here what you will be doing, you will be comparing your current performance with the past year performance, right? So basically what you will be doing, you will be taking the data of last 5 years, maybe 10 years, or maybe 3 years. It depends upon the financial analyst that how much data he wants to take, right? And he will be calculating the differences, or he will be calculating the growth, right? So here let's suppose if I do the fundamental analysis of horizontal analysis of shareholder fund, right? So what I will do, I will check that whether there is a growth in shareholder fund every year or not, right? What is shareholder fund? Shareholder fund means fund invested by investors, right? That is going to be equity share capital, and regularly how much profit company is earning and what profit company is transferring into reserves, right? This is going to be shareholder fund. So if shareholder fund is increasing every year, it shows that company is a profitable company, right? Company is a profitable company and the value of equity is increasing every year. So we will check this thing. So here I have taken data of 10 year. So first year if you see, that is 31st March 2021 until 31st March 2012, I am having the data. So what I will be doing, simply I will be calculating the growth in shareholder fund. So what I will do, I will simply apply the formula and I will check the growth. So what is the opening balance of shareholder fund? It is 1303 rupees, and this is the closing balance. So simply I have to apply the formula here, that is this minus this, close the bracket, and you have to divide this value, right? So if you see, there is a growth of 20%. There is a growth of 20%. Oh, sorry, I should copy this formula here. So if you see, there is a growth of 20%, right? So this is the base value. So here we won't be able to find out the growth. So if you see, opening balance of shareholder fund is 1303, right? In next year, the closing balance of the shareholder fund is 1565. So there is a growth of 20% approximately. Okay. So it's a good news if you are checking this thing. So there is a growth of 20% in shareholders fund, right? It shows company is a profitable company or the value of assets are increasing. Now further, if I copy these values, so we will be able to see next year there is a growth of 22%. Then next year there is a growth of 23%. Then 32%. Then 18%. And similarly, what you can do, you can check that there is a growth of shareholder fund every year, and it's a good news, right? Every year on an average, you can see that there is a growth of 20%. If I calculate the average of growth, so it will be average, and you can see there is an average growth of 16% in last 10 years, right? So it's a good news. If company shareholder fund is increasing every year, it shows that company is doing a good business, right? So you can do various these types of analysis, and you can find out whether company is performing well or not. If you want to see the debt status of company, so in year 31st March 2012, company was having debt of 364 crore, and if you see, their debt is in decreasing every year, and you can see debt is decreasing every year. So if you want to apply this thing, this formula here, so simply I can copy these values from here, and you see, so there is a decrease in debt, right? So in 2012 debt was 364, and right now debt is 313 crore, right? So there is a decrease of 14%. So it means if company is earning profit, so definitely what company can do, company can finance their own expenses with the help of profit. So what company is earning good profit, so company is having enough cash flow with them. right? So what company is doing, company is managing their expenses from their profits, and also company is paying their liability. So their opening liability was 364, and if you see their current liability is 77 crore, which shows that company is not defaulting in their loan payment and company is a secured company. So you can invest in Dabur Limited by doing these analysis, right? And further, if I talk about, we have discussed, we have seen the liability part, shareholders fund, we have checked, we have seen total debt. Now I talk about asset value, right? So if I want to find out whether asset value is increasing every year or, so companies whose asset value increases, that shows that company is a profitable company or company is a, so if I want to find out whether asset value is increasing every year or, so companies whose asset value increases, that shows that company is a profitable company or company is a sustainable company. So if that asset is increasing, so definitely it's a good signal for you to invest, right? So I will apply the same formula here. So instead of copy, what I will do, I will manually solve this equation so you will get better idea. Then opening closing value minus opening value, bracket close, divided by O value. So if you see, there is a growth of 55%, sorry, there is a growth of 5.3% in asset value. I will copy this data and we will see whether assets are growing out. So you can see here, there is a average growth. You can see there is a average growth. We can find out the average growth also, right? We will find out the average growth also. So here you can see there is a growth of, so there is a growth of 8.7%. We can see here there is a growth of 8.7%. This is the average growth by which asset is increasing every year. So good signal if value of asset is increasing every year. So it is a good signal for any company, right? So now further, if you see there is an effect of this percentage. So what I will be doing, I will be moving the effect of this percentage because I don't have to consider this percentage here. So I will be applying the formula. So yeah, so I have removed the effect of this percentage from this total value, right? So if you see, net assets are increasing every year, right? Now if I talk about current assets, so when current assets are increasing, we can apply this formula, same formula here, and we can find out that whether current assets are increasing or not. So if you see here, there is a continuous growth in current assets also, right? Average growth is 13.7%. So if companies sales is increasing, definitely the requirement of working capital is also going to increase, right? If company sales is increasing, it means there is a huge demand of product in market, right? And if sales will increase, definitely company will require more raw material, company will require more credit from their suppliers, so there will be increase in working capital also. So if there is increase in current assets, it shows that company is requiring more raw material, more stock, companies performing more credit sales, right? So it's a good signal for company if there's increase in the value of total current assets, right? Now further, if I talk about, we have seen the value of this is total non-current asset, I'm absolutely sorry. So there is increase in the value of total non-current asset. We talk about the current assets, so we will see whether there is increase in current assets or not, right? So I will apply the same formula, I will copy the above formula here, and you can see, yeah, there is also increase in the value of total current assets. And if I take the average, so here there is average increase of 8.6%. So you can see debtors are also increasing on an average. Debtors are also increasing every year. Here cash is also increasing every year. You can see here other current assets are also increasing. Here you can see other current assets are also increasing. It means company require more material, company is performing more credit sales, that is the reason debtors are increasing. Company cash is also increasing every year. You can see opening cash balance is 261 and right now the closing cash balance is 35. It means it's a profitable company, right? So what you can do, you can invest in this company. It's a good signal if the values are increasing, right? So same thing, what you can do, you can apply for liability also. When current liability will increase, when you are buying raw material on credit from your suppliers, right? Why you will be buying more raw material on credit from your suppliers, definitely there is increase in your sales. So you are buying more raw material from your customer, right? So it is also a good signal if your current liabilities are increasing. There could be some exception when it will give you bad sign, but right now other things are okay. So we can assume that current liability increase is also okay. It means company is buying more material on credit from their supplier, right? So if you see there, on an average increase of current liability is 7.2%, right? So this is what a horizontal analysis, what you will be doing, you will be comparing your current year performance with past year performance, right? So this is a detailed analysis, right? You can see what we have done. We have calculated the increase in shareholder fund. We have seen the decrease in debt. Why there is a decrease in long term debt? Because company is a profitable company, and no profitable company wants debt in their organization, because they will be able to finance their expenses with the help of their profits, right? So you can see these things we have discussed. In coming lecture we will be discussing about vertical analysis of balance sheet. So thanks a lot guys, stay tuned with us for more and better learning. Thank you.